Hello and welcome to BizPoints. The fiscal 2025 first quarter conference call for Nike Inc. began with Paul Trussell, Vice President of Corporate Finance and Treasurer, introducing the event and welcoming participants. Matthew Friend, Executive Vice President and Chief Financial Officer, then provided an overview of the company's financial performance for the quarter. The discussion covered various topics, including the upcoming CEO transition, revenue trends, product portfolio shifts, and regional performance. Friend highlighted challenges in certain markets and franchises while emphasizing the company's focus on innovation and brand momentum. The call also included a Q&A session where analysts sought clarification on inventory levels, unit sales, and future strategies. The top 20 key takeaways from Nike Inc. fiscal 2025 first quarter conference call are: 1. Nike is undergoing a CEO transition, with John Donahoe retiring and Elliott Hill joining as the new president and CEO on October 14, 2024. Matthew Friend stated, "As we look ahead, we're excited to welcome Elliott back to Nike. Elliott is a beloved Nike veteran who brings a powerful connection to our employees and culture, a deep love for our brands, and a passion for sport." End quote. This transition marks a significant change in leadership for the company. 2. The company has withdrawn its full-year guidance due to the CEO transition and current business trends. Friend explained, "Given our CEO transition and with 3 quarters left in the fiscal year, we are withdrawing our full-year guidance. We intend to provide quarterly guidance for the balance of the fiscal year." End quote. This decision reflects the company's desire to give the new CEO flexibility to evaluate strategies and develop plans for the future. 3. Nike's first quarter results largely met expectations, but the company is facing challenges in shifting its product portfolio and creating better balance in the business. Friend noted, "We are moving aggressively to shift our product portfolio, create better balance in our business, and re-energize brand momentum through sport. That said, a comeback at this scale takes time." End quote. This indicates that the company is in a transitional phase and working to address its product mix. The company experienced lower unit sales than expected in the first quarter, partially offset by a higher average selling price, ASP. Friend stated, "While Q1 revenue was largely in line with our plan 90 days ago, we delivered lower unit sales than we expected, partially offset by a higher ASP." End quote. This suggests that Nike is facing challenges in volume sales but maintaining price strength. 5. Nike Direct, particularly Nike Digital, saw significant traffic declines. Friend reported, "Traffic declines across Nike Direct were more significant than we anticipated. We saw particular softness in traffic on Nike Digital as well as in our partner stores in Greater China." End quote. This highlights the challenges the company is facing in its direct-to-consumer channels. 6. The company is intentionally reducing the proportion of its business driven by classic footwear franchises like Air Force 1, Air Jordan 1, and Dunk. Friend explained, "We have been intentionally reducing the proportion of our business driven by our classics footwear franchises, Air Force 1, Air Jordan 1, and Dunk. And as expected, Nike revenue in Q1 from these franchises decelerated, declining more than the total business as we tighten marketplace supply." End quote. This strategic shift is aimed at rebalancing the product portfolio. 7. Nike Digital is expected to decline double digits in fiscal 2025 compared to the previous year. Friend stated, "We expect Nike Digital to decline double digits in fiscal 25 versus the prior year." End quote. This projection indicates continued challenges in the company's digital sales channels. 8. The company is seeing growth in multiple sport dimensions, particularly in men's fitness, men's global football, and men's and women's running footwear. Friend highlighted, "This quarter, we saw growth in multiple sport dimensions, an indicator that we are gaining traction. This was led by men's fitness, men's global football, and men's and women's running footwear." End quote. This growth in performance categories is a positive sign for Nike's strategy to focus on sport. 9. Nike is building momentum in its running category. Friend noted, our teams focused here first in driving our comeback, and more recently, men's and women's running footwear delivered positive growth in Q1, a meaningful improvement versus the prior quarter. End quote. This improvement in the running category is seen as a crucial part of Nike's recovery strategy. 10. The company is investing in brand storytelling and marketing, as evidenced by its Summer Olympics campaign. Friend stated, "You saw that this summer with our Paris Olympics campaign. Winning isn't for everyone. We led with the voice of the athlete on sport's biggest stage, backed by one of our biggest brand investments in years as Nike athletes dominated the medal count." End quote. This indicates Nike's continued focus on high-profile marketing initiatives. 11. Nike is partnering with retailers to create differentiated retail experiences. Friend explained, for example, last year, we partnered with Dick's Sporting Goods to introduce an elevated women's fitness concept, which is generating impressive year-over-year comparisons in pilot doors. We also teamed up with Foot Locker to introduce a new concept, Home Court, in their doors with a shared vision to deliver a fresh, new multi-brand basketball experience. End quote. These partnerships demonstrate Nike's commitment to enhancing its retail presence. 12. The company's gross margins expanded in the first quarter. Friend reported, gross margins expanded 120 basis points to 45.4% on a reported basis, primarily due to lower Nike brand product costs, lower warehousing and logistics costs, and benefits from strategic pricing actions in the prior year. End quote. This improvement in gross margins is a positive financial indicator for Nike. 13. Nike's North America segment saw a decline in revenue and earnings before interest and taxes, EBIT. Friend stated, in North America, Q1 revenue was down 11%. Nike Direct declined 11%, with Nike Digital down 15% and Nike Stores down 1%. Wholesale declined 11%, reflecting unfavorable shipping timing. EBIT declined 15% on a reported basis, with gross margin expansion offset by higher investment in demand creation. End quote. This highlights the challenges Nike is facing in its largest market. 14. The EMEA, Europe, Middle East, and Africa region also experienced declines in revenue and EBIT. Friend reported, in EMEA, Q1 revenue was down 12%. Nike Direct declined 12% with Nike Digital down 24% and Nike Stores up 3%. Wholesale declined 11%. EBIT declined 15% on a reported basis. End quote. This indicates that Nike's challenges are not limited to North America. 15. Greater China saw a moderate decline in revenue and EBIT with mixed performance across channels. Friend stated, for Greater China, Q1 revenue was down 3%. Nike Direct declined 16% with Nike Digital down 34% and Nike Stores down 4%. Wholesale grew 10%. EBIT declined 4% on a reported basis. End quote. The growth in wholesale in China is a bright spot amidst overall declines. 16. Nike expects second quarter revenues to decline further. Friend projected, we expect Q2 revenues to be down in the 8% to 10% range. This outlook suggests that Nike's challenges will continue in the near term. The company anticipates a decline in gross margins for the second quarter. Friend stated, we expect Q2 gross margins to be down approximately 150 basis points, with higher promotions, channel mix headwinds, and supply chain deleverage more than offsetting lower product costs and a decreasing benefit from strategic pricing actions. End quote. This projection indicates pressure on Nike's profitability in the coming quarter. 18. Nike is seeing encouraging signs in its new product launches and innovation efforts. Friend highlighted, Q1 revenue from new footwear products was up strong double digits versus the prior year. This includes multiple franchises that have scaled quickly based on unit growth over the past 12 months. End quote. This success in new products is a positive indicator for Nike's strategy to shift its product mix. 19. The company's spring order books with wholesale partners came in flat compared to the previous year. Friend noted, as we look to the spring season, contribution from newness and innovation will take a significant step forward, with growth in footwear units of mid to high single digits versus the prior year. End quote. This suggests some optimism for future wholesale performance, particularly in new and innovative products. 20. Nike remains optimistic about long-term opportunities in China, despite near-term challenges. Friend stated, while our outlook for the near term has moderated, we remain optimistic about the long-term opportunities for sport and for Nike in China. End quote. This indicates that Nike continues to view China as a crucial market for future growth. These key takeaways provide a comprehensive overview of Nike's current business situation, challenges, and strategies, as discussed in the Fiscal 2025 first quarter conference call. The company is navigating a period of transition, both in leadership and product strategy, while facing headwinds in various markets and channels. However, Nike remains focused on innovation, brand strength, and long-term growth opportunities, particularly in key categories like running and in markets like China. This wraps up the earnings call. If you found this clip useful, we would appreciate it if you could help by liking, sharing, and subscribing, as well as viewing our other clips on other companies. Thank you.